And the total value of commodities traded on the AFEX commodities market dropped by 85% in the week of 9th of March to March 15th to close at 1.8 billion naira. And the number of contracts also dropped significantly. For details now, let's cross over to Michael Martin, portfolio manager at AFEX. Hello, Martin.
Hi, Ladi. Good morning.
Good morning. Great to have you. Great to have you. So first, give us an overview of the activities in the market in the week under review.
Yeah, so if you look at the table in front of you, it was a pretty red week on the commodities exchange on the week under review, with the total value of transactions traded on the exchange falling by 85% from around 12.1 billion to close the trading week at 1.8 billion. The total number of contracts traded on the exchange also fell by 86% from around 740,000 plus contracts to close the trading week at around 100,000 contracts plus. The total number of deals was also red, dropping by 23% to close the trading week at 118 contracts from the previous weeks of 153 deals rather. The ACI, which is the AFEX Commodities Index, also fell by 3.32%. From around 398.79 to close the trading week at 385.57. And lastly, you have the AEI, which is the AFEX Export Index, which fell by 1.11% from 160.69 to close the trading week at 158.90. With regards to the volume traded on the exchange in the week under review, we essentially saw a lower volume traded for commodities like maize, soybean, paddy rice, sorghum, cocoa, ginger. The only other commodities that traded up were sesame, which did a slight number in the week under review, and the recently launched cashew product, which did brilliantly well, trading 3,378 contracts in the week under review. With regards to price traded on the exchange in the week under review, our top gainers for the week was firstly paddy rice, which went up by 7.18%. And you'd have to imagine that paddy rice is a commodity used for household consumption, and it's also used by rice millers. So it went up by 7.18%, gaining 1,320 naira in contract value to close the trading week at 19,700. The only other gainer for the week was sorghum, which went up slightly by 0.66%, and you'd have to imagine that sorghum is also another commodity used by breweries. And for people that are alcohol inclined, it's also used to make certain alcohols like Brukutu, which went up by 124 naira in the contract or in the week under review, to close the trading week at 18,866 naira. For the losers of the week, we essentially had soybean, which is a major commodity used by feed mills and also slightly used for household consumption. It went down by 5.20%, losing 1,644 naira in contract value to close the trading week at 30,000 naira per contract. Another commodity which lost in the week under review was maize, which went down by 3.31%. Losing 673 naira in contract value to close the trading week at 19,658 naira per contract. And lastly, for commodities in general, was ginger, which went down by 2.24%, losing 2,000 naira in contract value to close the trading week at 87,362 naira per contract. We also have the fair trade exchange traded commodity, which, like I said, also lost value, losing 1.65%, and that's approximately 234 naira in contract value to close the trading week at 13,927 naira. And for people that want to get involved in the commodities market or generally want to get more information about the work that we do as AFEX Commodities Exchange, you can always go to our website, which is www.afexnigeria.com. And if you want to get directly invested in the commodities market, you can always download our COMEX app on the Google and Apple Play Store. Once you sign up, a body is going to be assigned to you, and they're going to take you through the entire process of how to start investing in the commodities market. So that's essentially, Ladi, all of what happened in the commodities market in the week under review.
Great.
Thank you, Michael. Well, looking at the price fall of maize, you talked about that, and the soybean, what would you advise companies looking to procure these commodities to do in the commodities market?
So the price retracement that we're currently seeing is partly influenced by, as we are all well aware, the CBN grain stabilization program, which was introduced into the market a couple of weeks ago. So that's partly what is causing the retracement in market in market prices for maize and soybean, and maybe even grains in general. Part of it is also due to the fact that we haven't had significant market activity going on due to the fact that a lot of the major off-takers have inventory that they're currently drawing down on, but we expect them to fully draw down on their inventory in the coming weeks, and then we expect them to be reintroduced into the market. So we expect that. So for people who are currently at the trading desk or the procurement desk for some of these companies, my advice would be for them to continue buying, because even just looking at the inflation numbers that were just released yesterday, which inflation went up to 17.33%, it's expected or reasonably expected that prices are going to continue trending upward in the coming weeks. So for people that want to procure, they should essentially just continue buying.
All right, we're finally seeing some movement in paddy rice. Is there any particular reason for this? Hello, Michael.
Yes, Laddie, I can hear you now.
Okay, so I said we're seeing some movement in paddy rice. Is there any reason for that?
So you'd have to imagine that aside paddy rice being a political commodity that can very often be influenced by government policy with regards to border closure and all and that, paddy rice is also a festive commodity, meaning that you tend to see price movement in paddy rice during the times when you'd expect festivities and celebration. And as we are all well aware, Ramadan is coming soon, and also the Easter celebration is coming soon. So very often we see major off-takers, particularly for paddy rice, participate in the market or participate in the market in anticipation of those celebrations so that they can essentially sell their paddy rice for a high price during those periods of celebration.
Now, historically speaking, what are some of the best performing commodities on the exchange with regards to return on investment?
So, if you look at the price data that we have, so just using last year as a proxy for how commodities tend to do generally. So maize, if you look at the closing price on the commodities exchange, maize went up by more than 91% last year alone. Sorghum was also another commodity that did extremely well, going up by more than 100%. Soybean did ever so slightly, going up by 12%, and then paddy rice was also another commodity that did well. So generally, you would expect that grains are enviable investment product for people that are looking for a competitive return on investment. And this year alone, we've already seen more than 30% in maize, and we've already seen more than 41% in soybean. I think generally you can get a comparable return on investment with export products, but that's very often determined by what happens in the exchange rate market and also what happens in the international market. But for people that are looking to invest in the commodities market, I would advise any day, any time for them to buy grains, because grains tend to go up significantly over the course of the season. I mean, the only other way you could have made more money on your investment portfolio last year alone was if you bought Tesla stock or maybe if you bought Bitcoin. But apart from that, I think commodities are always a veritable investment product for people looking for competitive returns on investment.
Well, Bitcoin seems to be making some kind of rounds now. All right, yeah, you talked about your newly added commodity, which is cashew nut. That was flat, in the week on the review. What's the reason for that?
So cashew is a very unique investment product, particularly because the season very often lasts a short period of time. It doesn't go up every single week. But as we expect the introduction of new buyers into the market, causing there to be a huge surge in demand. Right. So yes, it's okay that the price didn't move this week, but we expect that in the coming weeks with increased demand for this commodity, given that the commodity has a very short period of time, we expect that the prices will continue trending or should reasonably trend upwards. Yeah.
All right, now, Michael, we will talk about cocoa, but let's just take a short break. Well, cocoa is another commodity traded on the AFEX Commodities exchange. And Ghana, of course, is the second largest cocoa producing country in the world. It recently announced the shutdown of cocoa exportation to Switzerland and the intention to process cocoa and produce and sell chocolate locally instead. Now, here in Nigeria, cocoa is the country's major agri-commodity export. So how can Nigeria create a more profitable cocoa sector? Let's have this conversation with the investment manager at AFEX, Yusuf Ogumbi. Thank you very much, Yusuf, for joining us. Well, as a cocoa producing country in the same region, what can Nigeria learn from Ghana?
Good morning. Thank you very much for having me. So if you look at the emphasis here, the emphasis is on value addition. And for Ghana to be taking this kind of decision, you would realize that they've gotten some form of status, more or less like this, the big guys in the industry in terms of cocoa supply. So for Nigeria, what can we learn from this? That shows that we need to achieve certain elements that Ghana has achieved before we can take these kind of decisions. And first of all, we typically don't have the superior quality that Ghana has, so we need to work on that. We typically don't have the market infrastructure that Ghana has, which is solid, very solid on their end. So we need to work on that as well. In addition to that, we also need to build our productive capacity. So if you look at the productive capacity in Nigeria, we have a lot of aged trees, and we need to bring them up to speed, improve productivity. And at the end of the day, the key thing here is to be at that level where you have your qualities fixed, your market infrastructure fixed, and then the productive capacity fixed as well. And I think at that point, we could be considering these kind of situations.
All right, Yusuf, is it a viable move to make in the immediate term as a country with little production infrastructure and a high cost of financing?
So for us in Nigeria, we still have some hurdles to cross. So it's a decision that can be taken, but maybe not in the immediate term. So we need to cross these hurdles. Like you said, the infrastructure needs to be fixed, the rural linkage roads needs to be fixed, the market infrastructure, like I said earlier, needs to be fixed, the quality needs to be fixed, and these hurdles, we need to cross them. So if we cross these hurdles, I think it will be a viable option. Value addition is always a better option than selling the raw cocoa beans. And if you look at the overall value chain, just 6% accrues to the production end of the value chain. The remaining 94% accrues to every other person in the value chain, and you typically want to earn more in the value chain. So it's a good decision, but then we need to fix these issues first before we can then begin to look at this option as well.
Yeah, so Ghana is creating a market for their local chocolate as one of the benefits of the shutdown. Now, is there any potential for homegrown cocoa products in Nigeria?
Yeah, massive potentials, massive potentials. Yeah, in Nigeria, we might not consume chocolate as much, and in the rest of Africa, honestly, we might not consume as much chocolate as they consume in Europe, North America, but then we consume some other byproducts of cocoa. So take, for instance, cocoa powder is what is processed into Milo for us, the Bonvita, the beverages we take. We also have cocoa mass, cocoa butter, which is used in some other in producing some other products. And I think these items are critical. So if we have these items that are significantly consumed in Nigeria and the rest of Africa, we can begin from there, think of how we can process into these products, and then we can continuously build our chocolate demand. For Ghana, it's a good decision to try to ramp up or stimulate the consumption of chocolate in Ghana. And I think it's something that is good, but then these byproducts, we should not also forget them. They have significant markets in Nigeria, Ghana, and the rest of Africa.
All right, so what are the constraints faced by the cocoa sector, and how is AFEX solving these issues?
Yeah, thank you. So if you look at the cocoa sector, I mentioned some of these constraints earlier. Our productive base needs to be improved. We need to establish new plantations, increase the productivity of the current ones. We need to build solid market infrastructure that aids transactions in the market. We need to develop significantly our quality levels. We need to get to that point where our goods are not being rejected at any point in time. So if we get to that level, that's where we need to, those are those hurdles that need to be crossed. So AFEX, in our own case, we have two key interventions in this market, solutions in this market. So the first one is farmer engagement and training, where we capture these farmers. Over the years, we've progressively increased the number of farmers in our capture. We train them, we capture them under the financing scheme, input financing scheme. And basically, this is to solve the issue of productivity, the issue of quality. On the other hand, you have the warehouse network, the market infrastructure network, and this is to help increase the transaction volumes, transaction counts in these key producing areas. Imagine if the farmer does not need to go through an agent and is able to sell against a buyer on the exchange. The farmer typically will earn more, increase his income, increase his livelihood, and that stimulates a very good cycle, in the sector. So the farmer has more money to reinvest into the farms. He has more money to make from the farms, improving his livelihood, and that transfers to the rest of the value chain. Right? So those two key interventions, farmer engagement and training, and significant expansion in warehouse infrastructure, market infrastructure around these key producing areas. These are some of the places that AFEX is playing currently.
All right, thank you very much, Yusuf Ogunbiyi, for sharing your thoughts there with us. We do appreciate it. We take a moment now.
Thank you very much. Yep.
We take a moment.